What? All right. So, Abiona, please, can you read this question to us as soon as you can? Illustration two.
I should read it, sir.
Yes, please.
Okay, Toyota Nigeria Limited commenced business operation on 1st of May 2020 and adopts Catet 9 annually as it is accounting year end. The following information relates to their financial statements.
So we have period to thank you, Abiodun. So we have period to 30 September 2021 as a loss of 17,000 naira. We have a 17 million rather because we are working on to the nearest thousand. We have year end 30 September 2022 as 10 million naira. We have 30 September 2023 as 7.5 million naira. You recollect what I told you guys when we are dealing with basis period, right, and changes in accounting dates that whenever you have this word period two, okay, whenever you have this word period two, what it simply means is the period is an abnormal period. It's either it is more than 12 months or it is less than 12 months. Most of the time, companies use this period two for the first time they are preparing their accounts. All right, because a lot of times, that period is most likely more than 12 months, or in some cases, it is less than 12 months. So, what we have to do when we see this word period two is to check, okay, this is their first year, of business. So, when did they actually commence business? Then, how many months was it since they commenced business to the first accounting year end? So, can someone calculate this for us? First, 1/5/2020 to 30/9/2021. How many months is that? So 5 to 9. This is remember this is first. So we are five. We have to count five as part of it. It is the beginning of the month. So
That's 18 months.
17 months.
17 months, right? I believe it is 17 months because from 5 to 9 to the
No,
first.
that's 18.
Okay. Can someone confirm for us, please? Is it
16
18?
months. 16.
Oh, we have three answers now. So
17 months.
let me. How many months
Okay.
is it?
Yeah, 17 is 17. It's 17 is correct.
So do we agree that it is 17, right?
Yes.
Because you have to be careful. This is the beginning of the month, so you have to count five as part of it.
Yes, we
Okay,
have
so from
8 in the
five,
first. Mm.
so we have five in the first year. From this 5 to 9, it is five. Then plus the second 12, right? From May 2020 to September 2020 is 5 months, right? Then the second year, which is from um September 2020 from October 2021 rather to the following September 2021. I hope I'm not confusing anyone. So that's not even the point. The point is that this first year accounting year end is more than 12 months and it is worth 17 months. All right. So it means that the profit that we have here is for 17 months. And what that simply means is that we have to prorate. So I'm going to be sharing my screen. I'm going to be dividing it into two. Okay, so let's have the said you can see both screens, right? So we have Toyota. Please confirm to me that you can see both screens. We have
Yes,
Toyota Nigeria Limited.
yes, we can.
Okay, thank you. And we have the computation. What are we the computation of total profit? Don't forget total profit also means what's taxable profit, right? Total profit for all the years. Having your work in this format is actually very, very important. All right. like putting your solution and then talking about what you actually want to do. It's very, very important. Then remember I said in the last class that your format is very, very important. And if there's any reason why I'm doing one more question, it's just to emphasize the format. There is no big deal in calculating loss relief in loss relief questions. There is no big deal at all. All right. But where the big deal is your format. You have to be able to like present your work. And I believe I'm actually like really emphasizing that. So for the total profit, we said we have our tax year. Yeah, do we have to like have our basis period? Let me just cut this. Let me just copy this down so that we can have something else on top. Okay. So we said we have our tax year, column for our tax year. We have a column for our basis period. Then we have what our adjusted profits. Adjusted profits. We have two naira signs for it. Remember that, right? Then for the first year, what to be what will our accessible what would our tax year be rather? Our year of assessment, what will it be? So the
2022.
so the first year ends when? That's the first question we should ask ourselves. The first year ends when? They commenced business in first of first of oh sorry, this is too tiny. They commenced business in 1st of May 2020, right? And the year end is 30th of September rather every year. So when is the first year end? Don't forget they will have one 30th of September in the first year they commenced in 2020 before they now go to 30th of September 2021. Am I communicating, please? Am I communicating, please? So in essence, their first accounting year for the purpose of tax will be 30th of September 2020. Does that make any sense? So their first um their first basis period will then be from first the date of commencement. Don't forget that's what the law says, 2020, to the first accounting year end, which is what 30 September what 2020. Does that make any sense to us, please? Does it make any sense? What I'm simply saying is that the first accounting year end they will have, it will be in 2020 because their year end is 30th of September every year. So the first
Oh,
30th of September they will have is in 2020.
yes, yes, yes.
Although although they are preparing their accounts to the September of the next year, but
Mm,
regardless, a lot of
mm,
companies do that because they feel like they're just starting and so the period is too small for them to prepare a financial statement. In fact, a lot of time they have not even gotten themselves to really yet. That's the reason why they postpone the preparation of the account to the following accounting year end. But it
mm,
does not change the fact that their first accounting year end is in that year.
mm.
Does it make any sense, please?
Yes, sir.
So their first accounting year end is in September 30th of September 2020. So what will be the tax year? What will be the year of assessment of tax year like that?
2021.
2020.
2021.
Thank you. Now, in this particular case now, do not forget what I told you. I said that the first Naira sign would be for your adjustment, then the next Naira sign will be if there's a profit or not when you are dealing with loss relief. So the first Naira sign will be, is it a loss? So if it's a loss, are you adjusting for anything? If you're not adjusting for if you're adjusting for anything or you're not adjusting for anything, then the second Naira sign will now be your total profits, your final figure. All right. And I'll demonstrate what I mean by that again. So, but for us to be able to like do this, how many months do we have in the first year now?
5 months.
We have 5 months. But
5 months.
this profit is for how many months?
17.
17 months. So what do we have to do? We have to prorate, like say um for this period is equal to 5 divided by 17 times 17,000, right?
Yes.
Okay. So what do we do? We'll still put the workings down, but let us just do the formula now like this first. 5 divided
Uh,
by 17 times minus, or let me put it back, times minus 17,000. That is how much?
5,000.
5,000. Please, if you are not getting it, let me know. That is 5,000.
We are supposed to add thousand to that naira sign then.
Thank you so much. I was going to do that. Right, thank you so much for that. I want to do it so that it's not confusing. Okay, thank you. Then, then the second year is now 2022. Okay. What will be the business period for that year?
2022.
Yeah,
First
fast,
of
fast. First
first
of
of October
October,
October
20 what?
2020
2020.
To when?
to 30th September
30th
20.
September 2021.
Is it clear? So for this one now, we know that this year is the remaining 12 months, right? So what we can do is either we deduct 5,000 from 17,000, or we also prorate and say 12 divided by 17 times 17,000. Either way, so we'll have the same thing. But there's something that we have not done here. What we have not done here is to put what I have not done here is to put the adjusted profit for the first one. So what is the profit for the first year now? Is there any profit?
No
Is there any profit for the first one? No profit, right?
profit. No.
So we'll put 0 here. Okay. Now for this second year now, we have to have what we call, for this first year, there's something that we are omitting. For this first year, we have to have loss
No.
carried forward. Am I making any sense? So our loss carried forward will be also be what? 5,000, because we're not able to use any of it during the year. Does it make any sense, please? So for the second year now, we have a loss brought forward. A loss brought forward of how much?
Is minus 7,000.
How much are we
12.
bringing forward?
12.
No, no, no. How much are we bringing forward? There's a loss that we are
Mi-
bringing from last year.
Five.
mi-
Five.
minus 10,000.
Mm-mm. Hold on.
5,000.
Let's check this thing very well again. So for 2021, right, they made a loss. It was a loss of 5,000 naira. So
Yes.
we said for that particular period, there is no profit. Like that's the reason why we have 0 here.
Yes.
There is no profit to put or to relieve that loss against. So we have to carry the entire loss forward. And that's what we mean by a loss carried forward here to the following year. Now, this is the following year. This is the subsequent year, which is 2022. The first thing we have is what? Loss brought forward, which is how much?
5,000.
5,000. Thank you. Then we now have another loss for the year. All right, which is what? Loss for the year. We can call it for loss for the year. Just put FTY and call it how much? How much is the loss for the year now?
1,000.
Yeah? How much is
12,000.
loss for the year?
12.
12,000. How
12,000
did we get 12,000? We did,
is minus 5 minus 6.
yeah. So is it that you do 17,000 minus 5, or you do 12
12
divided
divided
by
by 17.
17 times
Multiplied
what?
by 7. 17.
times minus 17,000, which is what, 12,000. Again, in that case, is there any profit? No profit, because it's also a loss that they made for the year. Does it make any sense? So the loss carried forward in this case now, we also have a loss carried forward, right? Which will now be how much? 17,000. Because so the loss carried forward will now be the loss brought forward then plus the loss for the year. That is 5,000 plus 12,000, which gives us what? 17,000. Am I making any sense, please? Is it clear, please?
Yes.
Yes, sir.
Okay. So the following year is now 2023, right? And what is our basis period for that year? 1 then 2020 to 30th, 2021, right?
2021.
30th
Until today.
September
2020.
2022. Am I correct? So for
Yes, sir.
this year now, we have what? We have a loss carried forward, which is how much? 17,000. Am I making sense? Then, but for this year now, it is not a loss for the year that we have. We have a profit for the year, right?
Yes, sir.
Profit FTY of how much?
10,000.
10,000 naira. If you now we have a profit to relieve our loss against. If you relieve your loss, if you relieve your loss of 70,000 against a profit of 10,000, how much profit will be left for the year?
Loss of 77.
So
Um,
we'll still have zero profit, Abby, because the
Yes.
entire the loss will swallow the entire profit, right? So we'll still have zero here.
Yes.
Okay. Then are we going to have loss? Are we going to have like an excess loss that we are going to carry forward or not?
Yes.
We're going to have, right? Sorry, this one is loss brought forward, not carried forward. And we're still going to have like loss carried forward, which is what? Which will be how much?
7,000. Hmm. Carry forward.
7,000. Please. Is that Abiodun? Or who is that? I cannot see the person that is talking.
It's more about.
Muibat, okay. Why is it only Muibat that is talking?
Yes. Abiodun has been talking to.
I don't. Why are they the only people talking, please? Okun Victor, Usana. I need to hear you guys' voices too, please, to be sure that you're actually following me. All right. So, Osana, what will be the loss carried forward in this case?
7,000, sir.
7,000. A loss of
Yes,
7,000,
sir.
right?
Yes, sir.
Exactly. So in this case again, there is no profits. Am I communicating, please? Am I communicating?
Yes, sir.
Okay. So the final year, I believe, is going to be 2024, which will have a basis period from 1st of October 2022 to 30th of September 2023. All right. And for this particular year, we have a lot that we brought forward. Loss brought forward of how much? Okun Victor, what is our loss brought forward? Okun Victor, what's our loss brought forward for this year? Is Okun Victor in the class?
Yes,
Victor,
sir.
are you in the class? So what's our loss brought
Yes,
forward,
sir.
please? What is our loss brought forward for this period, please? Can you hear me? Okay, Osana, please help him. What's our loss brought forward for this period?
7,000.
7,000.
7,000. But don't hear you again, Victor. That was why I had to call you. So then, but then for this year now, is it a profit that we have or a loss?
Profits.
A profit. Profit for the year. What is the amount?
75.
7,500. Okay. Now, in this case now, we are going to relieve all of our loss against the profits, and we'll still have like a profit for the year, I believe. Is that so?
Yes.
Yes,
Because
sir.
now our profit for the year is more than the loss that we have brought forward into the year. So we are going to relieve all of the loss against the profit, and we'll still have excess what profits. So what is the excess profit that we're going to have in this case? How much?
Five,
500.
500.
500. Okay. And would there be any loss to be brought forward? Any loss to be carried forward? No. Is it clear? Is it clear, please?
Yes. Yes, sir.
So this is your computation. This column shows your total profit for the year. If you want to, if you like it, you can actually like differentiate the two naira sign and put this one as your accounting profit. Right? I think this is actually just the best method. Here, yeah, the examiner can see that you are making all of your adjustments here, and then you are putting your total profits here, right? And I believe that's just the simplest thing. So let me give you like 2 minutes to copy this down in your notes. Can you all see it well?
Yes, sir.
Can you see it well? Okay, please let me
Yes,
give
sir.
you
Yes,
two
sir.
minutes. Let me just give you 2 minutes to copy it down. The solution to Toyota Limited. You know the solution is not in the material I sent, so just copy this down.
Good evening.
Hi, good evening. Okay, is there any
Hi,
question? I didn't
good
even ask
evening.
this. Any question?
Yes. Can you please go over while others are copying? Go over
Okay, I
the
should go over
illustration.
explanation, right?
Yes.
Okay, okay. Actually, there's no, I want you to see it in the way that there is actually no big deal and the loss relief question. It's just to be able to like know your presentation well, right? So we said the first point where we started from was the fact that this first reporting date is 17 months. That is from 1st of May 2020 to 30th of September 2021. And I explained that you will see a lot of that in tax, right? Because companies most of the time do not want to prepare the account for the immediate first year because most of the time it's just like, for instance, imagine a company in starting business in May and already preparing account in September, account for just 5 months. So a lot of them will just feel like, why am I preparing account for just 5 months? Let me just carry it into the next accounting year end and just do a consolidated account, which most of them actually do. But when we are assessing them for tax, we must be able to like separate the profits using the number of months in each of the periods. All right, because now the first reporting date is more than 12 months, right? We have to be able to see that the first actual accounting year end was 30th September 2020 because there's actually a 30th September 2020 in the there's actually a 30th September rather in the first year, which is 2020, right? And we said from the 1st of September to the 30th of September of that same year of 2020 is 5 months. So we came here, we created a column for our tax year, we created a column for our basis period, and then two columns for our adjusted profits. The first Naira sign and the second Naira sign. We said that the first Naira sign is basically to do our workings, right? And the second Naira sign is to present our total profits, which the question asked for. All right. So in the first year, which is 2021, the basis period is 1st of May 2020 to 30th of September 2020. And in that particular year, we said it was a loss that they made. But how much, what was the amount of the loss? We had to prorate this to be able to get the portion that belonged to the first year. So what we did was the number of months in that first year divided by the total number of months represented in this reporting date, which is 17. So we said 5 divided by 17 times 17,000. We had a loss of 5,000. Because in that year, there is no profit to relieve our. So in that year, okay, let me just go again. In that year, we had a loss of 5,000 naira, but a profit of how much? Zero. That's the reason why we have that year. Now, in that year, there was no profit to relieve the loss against, so we have to carry forward the entire loss into the next year. That's why we have loss carried forward there rather, of 5,000 naira. In the second year now, we have the remaining 12 months in this particular reporting period. You know, the reporting period is 17 months. We reported 5 months in the first year and then remaining 12 months in the second year. Now, in that second year now, remember we have a loss that we are bringing forward from the previous year, which is 5,000 naira. We brought that in first. Then the second for that particular year, for 2022 again, that year again, it was also a loss of how much? The remaining 12 million naira or 12,000 naira, right? Also, no profit for that year, so we have that share. Then we have a loss that we are now carrying forward, which is a sum of what the loss that we brought from the previous year and the loss from the year. So we have 5,000 plus 12,000, which now gives us what? 17,000 naira. Okay. Then we carried both forward into 2023. In 2023 now, we have this basis period. And then the first thing we have is the loss brought forward, which is 17 million naira or 17,000 naira. Then fortunately for us in that year, it was a profit that we have. So we have at least we are happy that we have something to relieve our loss against at least a little bit. We have 10,000 naira profit for that year. So if we relieve our 17,000 naira loss that we're bringing forward with the 10,000 naira profit in the year, it will swallow the entire profits and we'll still be left with 7,000 naira loss, which we will now carry forward into the next year. But for that year, we'll not have any profit again. We'll not have any total profit because our loss from previous years has swallowed up the entire profit. We have relieved it against the entire profits, and we'll still have 7 million naira or 7,000 naira excess. That 7,000 naira excess will carry it forward into the next year, which is 2024. That's why we have a loss brought forward there of 7,000 naira. Unfortunately for us, in that year again, they are now. It looks like they are now getting themselves. They made another profit of 7,500 naira. Now we will relieve that remaining loss against the 7,500 naira, and for the first time, the company is going to have an excess profit, total profit of how much? 500 naira, because we will relieve all of the loss against the 7,500, and then we'll be left with what? 500 naira. So the total profit or the taxable profit for that year will now be, for the first time, 500,000 naira or 500 naira, because talking to the nearest thousand. Please, is it clear to that person that asked the question? I could not even see the person that asked the
Yes,
question.
love
Is it clear?
explanation. It's clear now.
Love
Thank
it.
you.
Oh, yeah. You're welcome. Very clear, right? Okay,
Yes,
so that is that about loss relief. Please, is there any question for? I mean, it will also show me that you have interacted with the note I sent. Do you have any question from your interaction with the note? Do you have any question on loss relief or maybe on what we have dealt with so far before I move straight into capital allowance? Who wants to help Hosanna?
Sir.
Chidima, you're saying something, okay?
Okay. The loss is granted on preceding year basis,
Thank
and
you
that
so much.
there's no need for application. It's
Thank you so much. It's
automatic.
granted automatically. I remember even saying that last class that if you have used these taxable marks before, you realize that if you filed for a loss in the previous year, by the time you are filing for the next year, right, before you get to the final stage, which is the form, you will see that the system already help you, already like inserted a loss relief for you already from what you filed the previous year. Am I communicating? So there's no need for any written claim to the federal government or FIRS for it to be done. It is automatic. It's granted automatically. Please, so please, the reason I'm doing all of this is just to remind us to start reading our notes. Start reading your notes, please. Start reading your notes. Start answering questions. Okay, I'll just do a little recap. Can we still see my screen, please? Can we still see my screen?
Yes, we can.
Okay, all right. Thank you so much for that. So I'll just do a little recap on the note I shared last week. I said that we started on the computation of capital allowances last week, and I'll make sure that at least this class we answer at least two questions before we all disperse. Okay, so last week we talked about capital. We started on capital allowance, and I told you that as accountant we have what we call depreciation. But for tax professionals, we feel like depreciation is actually unfair because depreciation is dependent on the company policy. Okay, I can decide that I want to be using the reducing balance method or straight line method or some of the digits method. In all of those methods, I can decide I want to be doing that. I can decide that if I'm using the reducing balance for my own motor vehicle, I'll be using 20%. Or even if it's straight line, I'll be using 20%. Or I will say that, okay, my useful life for my motor vehicle is 4 years. That is what I have decided. All right. Of course, there are guidance according to IAS 16 on how to go about it, but still, it is judgmental. It is to the discretion of the management. I can decide that my own is 25%, and Mibat will say that for a company it is 20%, and Osana will say that for his own company it is 30%, and Abiodun will say that for our own company it is 10%. You can see that there is no uniformity in the rates. So it means that different companies will have different depreciation. All right. So it is not uniform. And we feel like in tax, we feel like it is actually not fair. It is too judgmental. So instead of depreciation, we have what we call capital allowance. So capital allowance is like a refined form of depreciation, without all of the flaws that comes to depreciation. It is not judgmental. The rate is being prescribed by who? By the government authority or by the act rather. So it is like everyone, the rate is a standard. So if you have motor vehicle, for instance, you know that your initial allowance is what? 25%. It is 25/20. I believe, if I'm correct, or 50/25. I'm not sure again now. I get what I'm saying. So it is uniform for every taxpayer, regardless of who the taxpayer is. Am I communicating? So I said that last class, I said that so because of that, we have what we call capital allowance. And what do we mean by capital allowance? Capital allowance is a form of relief that is granted to taxpayers who have incurred qualifying capital expenditure, what we know as fixed asset in accounting, who have incurred qualifying capital expenditure during a particular business period. But that is not enough. I said that that particular taxpayer must have put that same QCE to use at the end of the period, not for any purpose, but for the purpose of what? Generating taxable income. So from this definition, we can see that we have implied some conditions that must be fulfilled before capital allowance is granted. Number one, the taxpayer must have incurred what we know as qualifying capital expenditure, not just any capital expenditure, but qualifying capital expenditure in a basis period. But that is not enough. That particular taxpayer must have put the asset to use or the QCE to use for the purpose of generating taxable income. Number one, he incurred QCE. Secondly, he has put the QCE to use. Thirdly, he has put the QCE to use for one purpose, the purpose of generating what? Taxable income. And I talked about the fact that there are three forms, although I was asked to streamline it to two, all right, because I mentioned in the last class that the last one, which is investment allowance rather, which is the allowance that is normally enjoyed on plant and machinery, has been repealed from Finance Act 2023. I believe I kept that in this note here exactly. So I said Finance Act 2022 reversed the investment allowance on plant and machinery. However, it only affects assets that are gotten. It does not affect rather assets that are gotten on or before 31 December 2022. Right? So what are these three types of capital allowances? We have what we call the initial allowance. And so that one is a one of allowance that is gotten in the first year of the asset. The second one is annual allowance, what you enjoy every year. And the third one is investment allowance. But I will not be talking about this so much just to avoid confusion. And so my lead lecturer has asked me not to really talk about that. All right. So for initial allowance, I've summarized, the features. Although I've explained it in the last class, but I've summarized the features and expect that you will go through them, you revise them. We talked about it in last class. For annual allowance as well, I've summarized the features already yet. So please go through your listing. Also for initial allowance, we said there's no formula for that. What we just follow is the rates that the law or the act has provided. Okay, the rates that the act has provided. But for initial allowance is cost minus for annual allowance rather, it is cost minus initial allowance divided by the number of useful life of the assets. Okay. For annual allowance, we also said that it's for the first year, if it was not used for 12 months, we cannot enjoy the annual allowance for 12 months. So we have to prorate for the first year. So in a case where there's no abnormality in the basic period for the first year, this formula will apply, right? But in a case where there's abnormality, that is where the period is less than 12 months, the period where we use the asset is less than 12 months, we have to prorate the annual allowance, and that is where this second formula comes in. This y divided by 12 is just to prorate for the number of months that the asset was used in the year. So we have cost minus initial allowance divided by number of useful life times y divided by 12. So in a case where the asset was used for just 4 months in the year, what we have here is will be 4 divided by 12. In a case where it is used for 8 months during the year, what we have here is what 8 divided by 12. In a case where it is used for 2 months in the year, what we have here will be what 2 divided by 12. I hope that is clear. But the original formula is what? Cost minus initial allowance divided by number of useful life. Does that make any sense, please? Does it make any
Yes,
sense?
yes, sir.
All right. So I expect that you will please go through the notes again. Go through the notes again. As promised, what we'll be dealing with today will be the calculation aspect. Now, for the calculation aspect, the first thing that I would like us to do, and the first illustration I would like love us to deal with, okay, will be basis period capital allowance. Please, can you mute yourself? Can everyone mute themselves, please? Can we all mute ourselves, please? Please, let's all mute our. I can hear a noise in the background. Please let us all mute ourselves. Can we all mute ourselves? Excuse me. Okay. Who is that person? Okay, everybody's muted though. All right. So now, The first thing I want us to talk about, and the first illustration I want us to check is under basis period for capital allowance. This is actually very important. It's very important. The reason why it is important is that it is important to note that it's important to know rather the year of assessment where the asset that you have acquired, where it will fall into. All right, I'll take that again. I said that the main purpose of the basis period for capital allowance is to understand what year or what year of assessment rather the capital asset or the qualifying capital expenditure you have acquired, what year of assessment will it fall into? All right. Will it fall into? And I said, the first thing I said here, I said that the Finance Act 2019 eliminates the abnormality in basis period. And we talked about that when we were talking about basis period. I said it eliminates overlapping and gap, you know, in basis periods. Therefore, the basis period for profits is the same with the basis period for capital allowance. By implication, all qualifying capital expenditure will be introduced to the relevant years of assessment because there is no overlapping or gap between basis periods. So what this is simply saying is that initially, before Finance Act 2019 came in, we used to have, basis periods overlapping each other. So in that particular case now, for instance, in a case where some basis periods in 2019 is overlapping with some basis periods in 2018, and you got a particular asset in 2019, there will now be this dilemma of when do I enjoy this capital allowance, the capital allowance on this particular asset? When do I enjoy it? Is it in 2018 or in 2019? Because I can see some periods that are for 2019 in 2018. I don't know if you get what I'm trying to say. But since Finance Act 2019, there is no more, there is no longer anything like that because now there is no longer overlapping and gapping periods. So, by implication, your capital allowance will follow suit the assessment of your profits. And that makes a lot of sense for us because it is similar to what we have in accounting, what we call matching concepts. That is, the expense for a particular period must be matched with the corresponding profit for that particular period. The same thing we are saying in tax. We are saying that match the capital allowance for a particular period with the profit of that particular period. Let the basis of assessments for capital allowance, let it be the same thing with the basis of assessment of what? Of profits. So, in summary, the basis period of profit will be the same thing as the basis period for what? For capital allowance. Let me give you an example. If a motor vehicle is acquired, or let me say, a motor vehicle, yeah, is acquired in 2005, for instance, because profit are assessed on preceding year basis. Am I communicating, please? Because profit are assessed on preceding year basis, the basis period for that particular asset will also be the same basis period for the profit that we're going to be assessing for 2005. Does it make any sense? It might not make so much sense, but we are going to demonstrate it with this particular example. Please, can you pause on this? Be fast. Check something. So the first illustration that we're going to be looking at is Jessica Ventures is a sole trader. Thank you. No, the note. Thanks. The first question will be checking together will be Jessica Ventures, Nigeria Limited. So can someone please read for us? I'm trying to check something. Can someone please read for us? Osana, please read for us. Okay.
Jessica Ventures, sole trader, commenced business on 1st of April 2005 and
Okay.
prepared accounts on 30th June annually. The following are acquired by the company on the date shown below.
Okay. So we have motor vehicle. Thank you so much, Osana. We have motor vehicle, we have plant and machinery, and we have furnitures and fittings. All right. So I want to ask you a question. For assets that are acquired before the commencement of business, how do you think we should treat them? Before I even like go further with my explanation, how do you think we should treat them? What year should we put them?
The year of commencement.
The year of commencement. So we should assume that
They were acquired.
assets that are acquired before the commencement of business, we should assume that they were acquired on the first day of business, right?
Yes, sir.
Yeah, that is most logical thing, and that's actually what the laws actually says too. Remember, we discussed something like that when we were talking about expenses incurred, before commencement of business. We said those expenses should be treated as though they were incurred on the first day. All right. Or when we okay, no, I think when we really talked about that was when we were talking about terminal profits. When we were talking about assessment for companies that are ceasing business, cessation of business,
Yes.
right? Where we say that receipts and expenses that happened, that happened after the company has ceased business should be deemed to have been received or paid on the last day of the business. Do you all remember we talked about that? Do you remember we talked about that? That
Yes, sir.
um,
Yes.
if
Yes, sir.
receipt and payment that happen after the company has ceased should be deemed to have been received or paid on the last day
Oh,
of business. That's something similar to what we are talking about here too. So if a company has, incurred any qualifying capital expenditure before they commence business, it should be deemed to have been acquired on the first day of what of business, and that's what the first requirement is saying. The first requirement is that how do you assess qualifying capital expenditure acquired before the date of commencement? We assume that they were acquired on the date of commencement, so that one is clear now. The second thing says that we should prepare an asset allocation schedule for 2006 to 2010 year of assessment. What I used to like to tell people is when you see a question that is before 2019, don't assume that you should be using the old law because it is a period under the old law. The new period started from 2019. All right. That's the preceding year basis. Started from 2019. Don't assume that for any question, just assume that it is under, don't assume that any period is under the old law. All right. Because the old law is no longer in use. All assessment is being done on preceding year basis now. Okay, so if there is any question in your, so the reason why I'm saying that is that the year that we have in question now is 2006 2010, which falls under the old law. But trust me, if you use preceding year basis for your exam, and if in your exam is something like this and you use preceding year basis, you'll be very good to go. Am I communicating, please? So they said we should prepare our allocation schedule from 2006 to 2010 year of assessment. What they are simply saying is that we should prepare a schedule that shows, the year that these assets will, the year that this asset will fit in, you know, as the year they were acquired appropriately. So what we're going to be showing in our asset allocation schedule is the tax year, the basis period, and then the QC that falls on that. Am I communicating, please? for 2006 to 2010 year of assessment. So let's go to that. Let's go to our Excel and then shift this like this. Excuse me, please. I'm gonna shift this down. I'm gonna shift this down. Okay. So we have capital allowance. All right. Okay. Then we have illustration one. Illustration one. And our first illustration says that A, preparation of what? Of assets allocation schedule. Preparation of asset allocation schedule. For Jessica Nigeria Limited. Okay. Let's just go ahead. So I see that for the preparation of our asset allocation schedule, we are going to have three columns, right? A column for the tax year or the year of assessment. Another column, let me just write YOA. Another column for the basis period, and the third column for what now? For the assets or the QCs that fall in. So let me reiterate this. For every capital allowance question, it is actually very, very important that you prepare your asset allocation schedule. And why is that important? So that you can know what year of assessment each of your assets fall into. And that is the major importance that's sorry, that is the major importance for what basis period for capital allowance. So that we can know what tax year each of our QCE fall into. So that we can appropriately allocate each of our QCE into the appropriate what year of assessment. Am I communicating, please? So I said we have three columns, year of assessment, basis period, and then QCE. So they said we should do for 2016 to what 2020, 2006 rather to 2010. So I'll just do 2006 to 2000 and what 10. Okay, 2006, 2010. All right. So for 2006 now, we have to like check what is the basis, what would now be the basis period. The basis period 2006 will be for 2006 to be from the date of commencement, right, to the end of the first accounting year end.
Yeah.
They said the accounting year end is what 30th of June, right?
30th June, yes.
Yeah, so our first basis period would therefore be from 1405 to what 30
36,205.
3605. Thank you so much. Let's just fill in all the basis periods first before we start allocating the KC. Then for are you fine? Then for 2007 it will be from what 1705 to when 3606. 2008 will be 1706 06 to 36
607.
07. 2009 will be 1707 to
608.
36 8. 2010 will be 1708 to
Oh no.
3609. There's a mistake here. All right. So now we now have to now allocate our our assets to each of them. So the first one is motor vehicles. When was it acquired? Please let's respond, please. I don't want to be
1st February
1st February 2005.
2005.
1st February 2005. When was the commencement of business?
1st
1st
April
April
1st
2005.
April 2005.
2005.
So you remember what we said earlier? We said that any asset that was acquired before the date of commencement should be
Mm.
assumed to have been acquired on the date of commencement,
On
isn't
date
it?
of commencement, yes, sir.
So for that one now, we will assume that it was acquired on when? On 1st of
April.
April
April
2005.
2005.
So you will now check your basis period. Where does it fall under? 1st of April 2005. Under what basis period does it fall under?
1st
The
April
first basis
2005. Yes, the
this,
first
this
one.
the first basis period. So it means that that asset, that particular asset will be under 2006 year of assessment. Does it make any sense? So here we have what? Vehicle. Does that make any sense, please?
Yes, sir.
What about the remaining people? Does it make any sense to the remaining people now?
Yes, sir.
Please, if you are confused, just let me know at this point before I move further. Does it make sense? Is there anybody that wants me to go back?
Mm.
All right. For plant and machinery, when was it acquired?
1st October
So I don't want it to
2006.
be only Muiba that is talking.
Next
She's not the only one
October
that.
2005.
Yes, please. I want to hear your voice. Yeah, exactly. I want to hear your voice. I want to be sure you are following me. 1st of October 2005, right? Where did it fall? Under what year of assessment does it fall? Under what year of assessment does it fall? So you have to check the basis period. When can you find within what period can you find 1st of October 2005,
2007.
2007? Because this is what first of this is 1/7 2005 to 30th 6 2006, so it must be within that period. So it means that your plant and machinery would fall under what 2007. Are you getting it now? If you do not do this, there is no way you would have known, except you have been practicing and you have been doing it over time. There's no way you would know that at straight glance, at immediate glance, that this one is 2006, this one is 2007. If you don't prepare this allocation schedule, you might have mistaken the fact that okay, because this one has 2005, then the year of assessment must be 2006. You'd have been mistaken, and that would have been wrong. That is the importance of preparing what an allocation schedule, and that is the importance of what we call basis period for capital allowance. For the final one, which is the furnitures and fittings, right? What is that? What year was it acquired?
10th May
10th of
2006.
May 2006.
10th of what? 10th of May 2006. So where can we find that?
10 2007.
Also 2007, right?
Yes, sir.
Because that is before 36, right? So do we all agree with that it is also in 2006, 2007 rather? Do we all agree? Who has a contrary opinion? Do we all agree? Okay, nobody disagrees. So That's actually right. So it is also, so what we do is just put comma here and also put what furniture and things. So these are the two periods that our assets fell under. Okay. For the third question, which is what compute the capital allowances claimable on the assets for 2005 to 2010 years of assessment. Okay. I'm going to send something to your group page now, which is the rate of the assessment. So I believe everyone is on the group page, right? Is there anyone that is not on the group page? Is there anyone that is not on the group page? I want to snap something and send to your group page. The rate for the capital allowance. I should have actually done that earlier, but let me just quickly do it. Where's the book? Where is the book? If I just snap it and send to your page now. So, this way,
These are the two.
Okay. Please let us all check let us all check the group page, please. Can we all see what I dropped on the group page? Can we all see what I dropped on the group page, please?
Yes, sir.
All right. So that is the rate. That is the rate for the the common qualifying capital expenditures that we have, and we are going to need it for this question that we want to deal with. Over time, I will expect that you will know some of this rate offhand, right? For instance, the motor vehicle I was talking about earlier is 50-25. So when I say 50-25, it means I'm saying the initial allowance is 50% and the annual allowance is 25%. For instance, you can see furniture and fittings. Furniture and fittings is 25-20. That is 25% initial allowance and what 20% annual allowance. What other common one do we have? We have plant and machinery, right? What's our plant and machinery? Our plant and machinery is also 50-25. Am I correct? No, it's not 50-25. Our plant and machinery is it 50, yeah, it's 50-25 too, right? 50-25 too. Can we all see that?
Yep.
Can we all see what I'm reading? All right, thank you. I would just copy this because have a fresh. Okay, physical ventures. Please let's all pay attention well. I'm going to like give us some time to copy, the solution in the first one. Let's all pay attention well. Jessica Ventures computation of capital allowance for 2005 to 2010 years of assessment. Okay. Now, I want us to pay attention. Pay good attention, please. When you are answering a question like this, although your answer script is very wide, so you might not like have issues with it, but make sure you manage your book well. Make sure you manage your booklet well. Especially when I expect that you actually have a ruler for your exam and you rule. Try to estimate appropriately how many columns you will need based on the number of assets that is in the question. All right. For instance, if I have 5 assets in the question, okay, I would rule based on the number of assets I have in the question, and I will show you what I'm talking about now. So first of all, let's pay attention, please. We have our QCE, and we have our rates, which is initial allowance and our annual allowance. Okay. I won't touch on the investment allowance because of the discussion I had with my senior lecturer. All right. Now, what are the QCs that we have in this question? We have motor vehicles, right?
Mm.
Am I communicating, please?
Yes, sir.
We have motor vehicles. What other asset do we have?
Plant and machineries.
Plant and machineries. I'll say P and M. What is the third this thing that we have?
F and F.
Furniture and fittings, right?
Yes, sir.
Furniture and fittings. Now we have the final column for what? For total allowance. So in this case now, you can see that although I have 3 assets, but I've created how many columns? I've created 5 columns. So for instance, if there are 5 assets in the question, it means that I must make sure I rule, I must make sure that my booklet contains 7 columns. Okay. If for instance, and I feel like this thing will be too tiny if I rule 7 columns on this, then I can do landscape. Am I communicating, please? I can do landscape. But I believe your exam booklet is too wide. It's even very wide for you to be doing landscape. So depending on the way you rule it, I believe that you cannot have. I don't see you having more than 5 assets in your question. Okay, so 7 columns should size your booklets appropriately. I'm very particular on presentation, so that is what we have. This is the presentation that we have. So now the next thing is for us to now fill initial allowance. What is the initial allowance rate? From the image I sent to the group page, our initial allowance rate for this is 50, right? 50, 25, right? 25. I wrote 25, 26, 25 rather. Let me put here percentage in brackets so that they can know that what I wrote there is in percentage. So let me put this one to percentage. Retain. Okay. What about plant and machinery? What is the initial allowance for plant and machinery, please? Someone should check for us. I don't want to be the one to say it.
50,
And
25.
someone should confirm the motor vehicles for us. Is it also 50/25?
It's 50/25.
Okay. What about furniture and fixtures?
25, 20.
25/20. All right. Thank you. Now, recall last week when I was explaining something about annual allowance. I said from the annual rates, from the annual allowance rates, we can be able to like depict what the useful life of the asset is. Do you remember I explained that? I said that, for instance, for motor vehicle, the annual allowance rate is 25%. So automatically, that means that the useful life is 4 years.
Oh, yes.
Because what this means is that in the first year, it will use 25%. In the second year, it will use the second 25%, making it 50%. It will remain 50%. In the third year, it will use another 25%, making it 75%, remain 25%. Then in the fourth year, it will also use what? 25%, and then that
Wow.
will be all.
No. No
Am I
goodness.
am I communicating, please?
Yes, sir.
So the act to it is to just say 100 divided by the annual allowance rate, and you get your useful life. Now, in the final year, remember I also said last week that in the final year, you must remain for each of the assets. In the final year, you must remain 10 naira. So it means that the annual allowance or the allowance for the final year must be less by 10 naira so that you can have a residual figure of what? 10 naira. Do you understand? And that is the way to be carried until the asset is eventually disposed of the books. Does it make sense, please? Does it make sense, please? All right. For this, I'll create two more columns so that I can accommodate my tax year and my business period. So the first tax year is 2006, right? 2006, and the basis period for that year is what? We already did it when we were doing our allocation schedule. What is the basis period for that year? Someone should clip like tell us.
2005.
Yeah,
1st April
First
2005,
April
30th,
2005.
30th
what
June
April
2000,
30th,
June 2005.
2005. Thank you so much. For this particular period, the costs. What asset do we have for this period? You have to refer back to your allocation schedule. That's the importance of your allocation schedule. What asset do we have for this particular period? Oh yeah, now I'm presenting the allocation schedule. What asset do we have for this particular period?
Motor
Motor
vehicle.
vehicle.
Motor vehicles. Thank you. It means that for this particular period, it's really motor vehicle that we're going to deal with. And what is the cost of our motor vehicle?
1
Pardon
million
me, please.
naira.
Let me just do this. Let me put Naira sign 000. Sorry. So for this one, we said that the cost is what? 1 million naira, right? Right. So it means I will have. Don't want this sense of giving me. Okay, let me have decimal, two decimal places. That's fine. And it means I have 1 million naira. The other assets in call. What about the other assets for this particular year? Do we have any other asset for this particular year?
No.
No.
We just put 0, 0 for them. Okay, just put 0, 0 for them. Okay, let's put 0, 0 for them. I think this one is not in accounting. Okay, now the first thing to do is to compute is what our initial allowance, right? For our initial allowance, we said the rate is what 50%, right? So it means we will do 50% of 1 million. So automatically it means that our initial allowance is what 50% of 1 million is what
500.
500,000. Then we'll come to this total and put 500 here as well. Is that clear, please? Am I communicating, please?
Yes, sir.
I think I should rule this thing so that it will be so just to have the demarcation. Okay, I think this is better now. Okay, that is that for that. Then the initial allowance now, and the annual allowance rather. For the annual allowance, I said that the reason why we did not prorate, for the initial allowance is because we said that the initial allowance is enjoyed in full, regardless of when in the year or how many months in the year it actually used. But for annual allowance, we have to prorate by how many months during the year it's used. Am I communicating, please? So for the annual allowance now, how many months in the year did the asset use? When did we acquire it? We said we acquired it on 1st of February, right? 2005. But because that was before the date of commencement, we are assuming that it was acquired on the first day of the date of commencement, right? Which is 1st of May 2000 and 1st of April, pardon me, 2005. Now, from this basis period, how many months do we have? How many months was the asset used for during the year?
3 months.
3 months.
3 months. So we have to come to our workings down here. I'll just have my workings down here. I have my workings down here. So for the first one, our workings one. For the first, for motor vehicles, it was just for 3 months, right? And we said annual allowance in the case where there's abnormality rather in the basis period. We said the annual allowance will be what costs is equal to costs minus initial allowance, right? Everything in brackets. Everything in brackets. Am I communicating, please? Divided by what? Number of useful life. Divided by number of useful life. Times, we have to now prorate because it's an abnormal period. Times y divided by 12. We all remember this formula. Do we all remember this formula, please?
Yes.
Yes, sir.
Are we following? I want to be sure I'm not confusing anyone. I'm trying to take it a step at a time. And I want to be sure I'm not confusing anyone, please.
Yes, sir.
Okay, all right. So what is our cost? Our cost is 1,000. What is our initial allowance?
500.
500. Thank you. So all of this in brackets divided by what is the useful life? Remember, the annual allowance is 25%.
Four.
So what's the useful
4.
life for?
4. 4.
Times what? How many months was it
2%.
used for the year? For how many months was it
Three
used?
three
Eh?
months. 3 months.
3 months. Do we all get the way you got 3 months?
I did not get it though. He said four. Where is four coming from?
So 4 is the useful life. We said the annual allowance is 25%, right? Remember what I told you initially. From your annual allowance, you can get your useful life. Just say 100 divided by the rate of your annual
Oh,
allowance. So
okay,
100,
four. That's 25. Four. That's
yes.
100. Okay, I get it.
You get it now, right? Now, we are now
Mhm.
talking about how many months in the period was it used for? How many months from the period was it used? So you have to like calculate from when
Mhm.
was it? Well, so 3 months, right? From 1st of
Mhm.
April to 30th of
The 30th.
so it is only for that 3 months that it can enjoy the annual allowance. And maybe it is initial allowance. See that when we're computing the initial allowance, it is one of and it is not prorated. You see that we not even prorate, we just charge the entire 500,000 for you. But for this one now, you can only enjoy for the number of months that you use the assets, which is actually how many months? 3 months. So we are now going to say that 3 divided by what? Divided by 12.
12.
We're going to prorate. So can someone compute this for us? 500 divided by 4 times 3 over 12.
31 to 50.
31, 250. Thank you. So we'll come here and put,
Wow.
okay, we'll come here and put 31.25, right? Is it 31.25 or 31 to 50? So I think we should
And
just
what's 31.5?
31.25.
yeah, thank you. But I think we should just come here and use n instead of using working into the nearest thousand, please. Let's just so that we will not be approximating unnecessarily. Let's just do the 1 million, right? So
Yes.
1 million. This is 10 million.
That's it.
Ah,
Yeah.
um,
Was
million.
yeah.
So then this
So
one as
then
well,
this one as well,
500,000.
500,000.
Okay.
Okay.
I can hear
I
myself
can hear
back. What's
myself
happening?
back. What's happening?
I
Someone,
think she made
I think she made
in my feedback.
in my feedback.
Oh.
Oh.
Okay.
Okay.
I can hear myself
I hear
back. What's
myself
happening?
back. What's happening?
Hello.
Hello.
Why am I hearing myself back? Are we all muted? You're all muted, right? Okay. The feedback has stopped. It was really disturbing. Okay. So for this one now, we said we have what 31 250. So we'll come here. This one will become 500,000 too. Here we now have 31 250 as well. Okay. So we'll sum the total allowance. What do we have here as our total allowance? And so I also sum this for us. So we have 531,250, right? So that's our total allowance for the tax year 2006. Does that make sense? Does that make sense, please? So we are done with 2006. We are done with 2007. Does that make sense, please?
Yes, sir.
Do we all get to this point? Do we get
Yes.
all the way we got? Do we get how we got 31 to 50 to this point?
Yes.
All right. So for 2007 now, 2007, what's our basis period? Our basis period is what?
One,
First,
first
7,
July
July
2005,
2005
30th
to
June 2007.
is
30th June 2006. Okay. But here now, because we already have an asset before, the first thing we're going to calculate is what is our tax written down value. This is very similar to what we call carrying amount in accounting. But here we call it what tax written down value. And I explained to you that your tax written down value is what your cost minus your what your initial allowance minus your annual allowance. That's in the first year. But subsequently, you can only have initial allowance once. But so subsequently after the second year, the only thing you'll be having will be your tax written down value minus annual allowance minus annual allowance minus annual allowance. Because there will no longer be initial allowance after the first year. But for this first year to be your what your cost minus your initial allowance minus your annual allowance. And the only asset that we add in the first year that we're going to have TWDV for is our motor vehicle. So can someone compute 1,000 minus 500 for us? So 1,000 minus 500 minus 3,1,250. We have 40,468,750. Am I correct? Can someone confirm that? Am I correct?
Yes, sir.
Okay, so
Okay,
here
so
we have
here we have
zero.
0.
We also have
We also
zero.
have 0.
Can you mute back?
Can you mute back?
I hear myself.
I hear myself.
Okay. Then, do we have any other assets coming in for this year? Let's check our allocation schedule. Yes, we do. We have two assets coming in that year. Our plant and machinery and our furniture and fittings. Our plant and machinery and our furniture and fittings are coming in that year. So it means that we will have costs. Assets that are coming in. Costs. For the cost, motor vehicle will be zero because that one we have introduced it earlier. But our plant and machinery, because it is coming in that year, how much is the cost? What is the cost for our plant and machinery?
Machinery.
1,600,000.
What about our furniture and fittings? 3,600,000. Right? And we have our allowances now. The first thing we have is our initial allowance. Chidima, are we going to have initial allowance for motor vehicle? Chidima, can you unmute yourself and answer? Are we going to have an initial allowance for motor vehicle in this case? Is Chidima in the class, please? Chidima in the class? Chidima, you're in the class now, so respond. I hope you have been following. Chidima, are we going to have initial allowance in this case? We can hear you. Unmute yourself and respond. You are muted. Okay. I think Chidima is not available. Osana, are we going to have initial allowance in this case?
For motor vehicle, sir.
Yeah. Are we going to have initial allowance?
I think so, sir.
Well, why do you think so?
The 468,750.
Okay. I will take it again. Chidima, do you want to say anything now? Chidima, do you want to say anything now?
Yes.
Okay.
Okay. Thank you. For motor vehicle, no, we will not have initial allowance for this year. It has already been taken. It's usually taken once.
Okay. So, Osana,
Sir,
Osana, if you recall, I explained that initial allowance is only enjoyed once, and that once is in the first year of the use of the assets. So for this motor vehicle now, we already enjoyed the taxpayer already enjoyed the initial allowance in 2006 when it enjoyed 500,000. So it has enjoyed it once, it cannot enjoy it again. All right. On motor vehicle, you cannot enjoy it again. Now, the only initial allowance that you can enjoy now is on plant and machinery and furnitures and fittings. And once it enjoy for those ones too, once it cannot enjoy initial allowance on it again. Hosanna, do you understand that? Hosanna, please unmute yourself and let me know if you understand that. Hosanna, I cannot hear you. Please unmute yourself. Okay, I think I'll just go ahead. Please, do we all understand? Someone should unmute and let me
Yes,
know if you
yes,
understand.
yes, sir.
All right, thank you. Okay, back to our question. Almost done, don't worry. For our initial allowance now, we said for motor vehicle, there won't be any initial allowance again because it is not a new asset. The only initial allowance we enjoy will be on the new asset that we have just introduced, which is plant and machinery and furniture and fittings. I will repeat again, we don't prorate initial allowance. Initial allowance, even if it's a month to the year end that you acquired it, you will still enjoy your full allowance. It is only annual allowance that we want that we prorate. Does that make sense? So for this one now, we don't have to be checking when was it acquired. We'll just enjoy the full allowance. So what is the percentage for the initial allowance for plant and machinery? Someone should meet and tell me, please.
800,000.
What is the percentage, first of all?
Okay,
50%, right?
50%.
So it means that the initial allowance will be what? 800,000.
800.
Okay. For furnitures and fittings, someone should compute 25% of 3.6 million for us.
900,000.
900,000. Thank you so much. Okay, so now add these two together. Let's have the total allowance here. Total initial allowance here first. Add these two together. That should be 1,007
1.7.
1.7 million, right?
Yes.
7 million. Now that's for our initial allowance. Then our annual allowance now. Our annual allowance now will be what? First, our annual allowance for this. So everything now we have annual allowance, right? Our annual allowance for this would be what will be our annual allowance in this year now. It is a 12-month period. Am I correct? This year
Yes,
is a 12-month period now. Am I correct?
yes,
So
sir.
motor vehicle year will now be the annual allowance for motor vehicle year will be 12 months. Don't forget here it was how many months? Just 3 months, right? Here it's now be what? 12 months. Okay, so we have to calculate for the 12 months. Annual allowance, second calculation, motor vehicle, still motor vehicle. Annual allowance too. In this case, there is no abnormality again. We have 12 months in the year. So we have costs minus initial allowance divided by what? Number of useful life. For the number of useful life for the second year now, it's not be the entire number of useful life again. Or in any case, for the second year, the annual allowance will be tax written down value, the tax written down value divided by number of useful life minus 1. Let me know if you get that. Am I communicating, please? Do you get that? You can either do that or say,
So,
okay, don't worry. You can either do that or say that cost, or still say that cost minus initial allowance divided by number of useful life, knowing fully well that the knowing fully well that your n is 4, right? Your number of useful life is what? Is 4, right? So what is our cost again? Our cost is 1 million minus 500,000. Okay, minus 500,000 divided by 4. Someone should compute that for us. Someone should compute this for us, please. Fast, fast. 500 divided by
125,000.
4. Eh?
125,000.
That's not correct. 1 million minus 500,000 divided by 4. That's 500,000 divided by 4. Oh, yeah, oh, yeah. Do it again.
125.
Okay,
Correct now.
125,000. Okay, I didn't, I thought I had done that thing.
She said 125,000.
Oh, so sorry. 5,000. Thank you. So, here, our annual allowance will now be what? 125,000. And that will be the annual allowance for subsequent years until the asset is fully used. Okay, 125,000. Now, for this one, our annual allowance will be how many months was it used in the year? So it was acquired on the 1st of October
Excuse me, sir.
2005. Eh?
Excuse me, sir.
All right,
When
thank
you
you.
were writing down the formula, you use the TWDV, that's the tax word value. But when you were doing the computation, you use the cost instead.
Okay, I changed it. I wanted to use the tax written down value before, but I didn't want to confuse you guys. So I changed it back to cost minus annual initial allowance divided by N. Do you understand?
Yes, sir.
Okay. I would have used the tax written down value before again and do tax written down value minus or tax written down value divided by N minus 1. But I just felt like that's like so much confusion for I don't want to cause any confusion. That was why I changed it back to cost. It's also the same thing. All right. So
Okay, so just to accept
let's just
the
stick with this. Yeah. Let's just stick with this with one formula and just continue to use it. All right. All right. So for plant and machinery now, how many months in the year was it used? It was acquired on the 1st of October. So 1st of October to the end of the accounting period or the end of the basis period, 1st of October 2005 to 30th of June 2006. How many months is that?
9 months.
9 months. So we have to come here and calculate. Please, can someone confirm that she's correct? So here, AA1 what will be what? 1,600 minus 800, right? Divided by what? Divided by it's also 25, Abi. The annual allowance is also what? It's also 25, Abi. Okay, it's also 25 for
Yes,
PM. It's also 25.
25.
So it's also 4 years then divided by 4. So can someone compute? Okay, times how many months? All of this in brackets. Oh, not like this. This in brackets. I don't like this. Times how many months? How many months did you use during the year?
9.
over
9 divided
12.
by what? By 12. And someone
Hmm.
quickly compute this for us, please. 800 divided
150,
by 12. 150 what?
150,000.
150,000.
Right.
Is she correct, please?
Minus
Let me just do it here. 800, not because we not trust you, just so that we will not make mistakes. Divided by 4 times
150. Yes, correct.
150,000. Okay.
Sorry, sir, I have a question.
All right. What, yeah,
The
go ahead with your
other
question.
the other formula that you want to use, I'm interested in that, but I didn't get the same thing. That tax written down value divided by n minus 1. It didn't give me 125,000. So
Yeah,
why did
the
you want to
same,
use?
the reason why you did not get, the reason why in practice that is what I would have used. The reason why you're not getting the same figure is because this first year is not 12 months. All right, it is not 12 months. I didn't mean it is 12 months now, it would have been easier for us. But for this first year, it is not 12 months. So let me give you an instance. If the first year was 12 months, right, I would have just said that my tax written down value for this if this first year was 12 months, then my annual allowance for the first year won't have been 31 to 50. It would have been this 125 exactly. Because I would have just done for this first year, if I have not prorated, please listen to me very well. I would have just done 1 million, right? Minus 500,000, right? Divided by 4 without any proration. If you calculate this, it will give me 125,000 instead of this 3,125 that this one gives to me because I have to prorate. Are you getting what I'm trying to say? So my tax sitting down value in this case will not be 468,750. It will now be 1 million minus 500,000 minus 125, which will be what 375. So it would have made me being able to use that formula. So I would have been able to use that tax written down value divided by n minus 1. So if you do this, you will see that you will get the same thing. So do 375, which is the tax written down value, divided by n minus 1. Our n is 4 minus 1. What is that? 3. So 375 divided by 3, what does it give you?
125,000.
Do you understand what I'm trying to say now? But Adibi, I'm the one doing it. And if I'm not teaching you now, I would have known how to go about it. All right. But it will be a lot of confusion for you using that formula. That was the reason why I just cleaned it back. But if, for instance, you find yourself in a tax firm, for instance, and you see maybe their tax work paper, it is possible that that is what you're going to see there because they complete their annual allowance on their tax written down value. But you will now be the one, because of your understanding of the tax law and the way it works, you will now be the one to understand that for any for the first year, for instance, right? If they do not prorate in the formula that they put in their Excel or in whatever they use for their work paper, you would understand that according to the law, you are meant to actually prorate. So what it means is that the annual allowance for the first year will be different. It will not be 125. It will be prorated by the number of months that the asset was used in the year, right? So subsequently, if I want to now start using my tax written down value formula, I would have completed this one and know that, okay, that is my annual allowance for the year. But when I want to compute for the second one, I will not use this figure. I will use the full figure without prorating. But that is a lot of confusion for everyone. Why don't you just stick with this? This is like just straightforward for you, right? Am I correct?
Yes, sir.
Right.
This, yeah, is this way straightforward. But I've worked in a tax firm where that was it was at the place that they made me used to using tax written down value to compute my annual allowance actually. But of course, they expect the reason why they are using that is because they expect that you should know. But for your exam, because I'm teaching you, if you're also teaching someone, I will not expect you to use that formula because it can cause confusion. All right. And they will expect you to know that if there's a proration, prorate, reverse back, and continue using your tax written down value. Is that clear now? Is it clear now the reason why I'm not using it?
Yes, sir.
Okay, thank you so much. Thank you for asking the question actually. It's made me realize that you were following me. Okay, so for our PM, I said someone should compute it for us. So this is 150. Oh, you said this is 150, right? So are we sure this is let's check this again. Are we
Yes.
sure this is 9 months?
Oh,
Are we
it's
sure this
9
is
months.
9 months?
It's
It's
9 months.
9 months, right?
Yes, sir.
10, 11, 12. Okay, yeah, it is 9 months. So yeah, correct. It means the solution I have in this my notepad is wrong then. It's wrong because I'm sure that what we are doing here is right actually. So 150,000 here, 150,000. And what about for this one? We have compute for number 4. For this one, for furnitures and fittings. Furnitures and fittings. What's our annual allowance for it? Our annual allowance will be what? 3,600
36.
minus what? What did we say our initial allowance was?
900.
900 minus 900 divided by what is our useful life now?
5.
5. Thank you so much. Then someone should help us look at how many months was it used for during the year.
2
2.
over 12.
2 over 12.
2 years. So it was used for just 2 months, right?
Yes.
So 10. So we assume that 10 is like almost at the beginning of the month, right? So that's okay, that's fine. Times two divided by 12. So that for us.
Ninety. Yes.
Eh? And what? I didn't hear that. I didn't get that.
90,000.
90.
Okay.
90,000.
Okay. Okay. Looks like there's something wrong, but I believe you are right. Okay, can we sum all of this up and give me the total here?
365,000.
365,000. So let me confirm this figure. 3,600 minus divided by 5 times 2 divided by 12. Okay, that's cool. That's fine. Thank you. So it means that there's a mistake in this computation I did in my notes there. All right, let's continue. So what is our total allowance for this period now? That'll be 1.7 plus 365. What does it give? What does it give us? 125 plus 150 plus 90. Okay, sorry, 1.7 plus 365 rather. What does it give us?
2,065,000.
2,065,000. That's 2065000. Thank
Zero
you.
zero zero.
So we now have 2008. From here now, it is straightforward because there is no longer new assets. All we are computing is just our annual allowance. So we have our tax written down value. What's our tax written down value? For this one, 468 minus 25. What do we have? 468, 750 minus 125. Just wait. 343, 750, right? Then
Yes,
for
sir.
this,
Yes, therefore, there is
we have 800 minus. I would do 800 minus 750, by minus 150 rather. That is 160,000 minus 800 minus 150. That's what I did. So we have 650 for this one. Okay. Then for this one, what is it? What do we have? 3.6 minus 900 minus 90. Let's be fast because of our time. We have like 15 minutes more, and I want to wrap it up.
2,610,000.
2,610,000. But that's fine. Then our annual allowance now. Our annual allowance for this one will be 125,000 because that's the annual allowance for 12 months. Then for this one, we have to now compute it. Number five, P and M. Annual allowance for the full month. You know, the annual allowance that is there before is for, we have prorated it. So annual allowance for full months, for full year will now be what? 3600. Right, minus 900 divided by 4. No, so sorry, that's for F and F. That's 1600 minus 800 divided by 4. Right, someone should compute this for us. Someone should compute this for us.
200,000.
100,000, thank you. 200,000. 200,000. So, okay. So let's compute for the second annual allowance of F and F2. Number 6. F and F AA2. So we said that one is 3,600, 3,600 minus 900, 900 divided by 5. What do we have, please?
540,000.
540,000. Okay. 540,000. Okay, so let's compute all of this. If we sum all of this together,
865.
865. Thank you. 865. All right. So that is that. So then for 2009 now, consider that one is just one liner because all we have to be doing now is to compute annual allowance because there's no new asset tax written down value, right? What's our tax written down value now? Just let me remove this one. this minus this, and this minus this. Okay, let's copy it all through. Right. Am I communicating, please? Am I communicating, please?
Yes, sir.
Okay. What about our annual allowance for this now? Annual allowance for this will be what? It will be 125,000 because that's your annual allowance for so, let's see. Annual allowance for 12 months. For this one to be 200,000. 100,000. For this one to be what? 540,000. So we have what? It's we total have 865 here to write. Is that right? So let me check it well. For this particular one, how many years for motor vehicle, how many years is the useful life? How many years is the useful life for this particular one? For motor vehicle is 4 years now. Please just respond, please.
Yes, sir.
Yes.
For motor vehicle is 4.
For 4 years. So it means that 2009 should have been the final year. Am I right?
For motor vehicle.
For motor vehicle, it has used 2006, 2007, 2008, 2009. So 2009 should be the final year.
Yeah.
Do we understand what I'm trying to say? It is the final year. So for the final, because it is the final year now, the annual allowance here will be the entire. So it is in that final year that we are going to like the, take out all of the allowance, the remaining allowance, while leaving just 10 naira. Do you understand? So someone should do. So it means that this asset actually has to go out of the book in this 2009.
Mm.
Does that make any sense? Because that is the fourth year.
Yes, that's the 40.
So can someone do 218,750 minus 10 for me? So that will be 218,740, right?
Yes.
Because we have to retain 10 naira. 218,740. Okay. This one for P and M, because it started in 2007, after 2009, to still have 1 more year, right?
Yes, sir. Okay.
Yeah. But for F and F, the useful life is 5 years. It has used 3 years now. It will have 2 more years after this 2009. Right? Right? Am I communicating, please? Gosh, nobody's responding. Is it
Yes,
confusing? Is it clear? Okay, please compute
the
this.
P and M, the P and M is also 4 years. The
It's also
useful.
4 years, but it's also 4 years. But remember, we did not apply it in 2006. It has only used 3 years.
Yes,
For
okay. Yes.
motor
Yes.
vehicle was acquired in 2006, so that one has already used 4 years. But P
Yes.
and M was acquired in 2007, so it is still in its third year.
Yeah.
That's 1 more year. F and F is 5 years. It is in its third year. That's 2 more years. Is that clear now?
Yes. Yes. Yes.
Okay. Is it clear?
Yes, sir.
Okay. So this is our total allowance for this one now. Right? Then 2010. They said in the question that we should calculate capital allowances claimable from 2005 to 2010. So this is where we're going to stop. So for 2010 now, the tax return down value, first of all, for motor vehicle, it will be how much? Oh yeah, chorus answer, please.
Vehicle.
Motor vehicle has already don't be already said that motor vehicle has
Motor
gone out of the book now. It has reached its final year. So what will be the this thing? What will be the tax written down value?
10 naira.
10 naira exactly. That is the reason why we put 218,740 here, so that there will be an extra 10 naira that will make the asset still be in the book
the
until it is
residual value.
disposed. That's the residual value. Thank you so much. 10 naira. For this one, it will be what? 250, right? 250,000. That's 450 minus 200,000. Am I communicating?
Yes, sir.
250,000. For F and F, it will be how much? Someone should do 2070 minus 540 for me. Let me just do it here.
One
That will
five.
be 1530. Okay. Right. So that is that. So our annual allowance for that one will be for motor vehicle will be how much? Annual allowance for motor vehicle will be how much?
Motor vehicle.
Is there still going to be any annual allowance? It has been fully
No,
depreciated.
fully.
Yeah, it has gone out of the book. Don't forget this thing is also like depreciation. It's like depreciation actually. So this has gone out of the book. So is there going to be any annual allowance again?
No.
No.
No, no.
So that will be zero for this one. It's only the residual value that will be in the book. It will be 10 naira, 10 naira, 10 naira, 10 naira until they sell the assets before we now compute what we will discuss in the next class, either balancing charge or balancing allowance. All right. So, but let's leave that for now. For this one, for P and M, it is in its fourth year, which is in its final year. So for this one again, we'll remove 10 naira so that we can leave 10 naira and then allow the remaining because it is in its final year. So what is 250 minus 10 naira? 250,000 minus 10 naira.
40,000.
240.
Eh?
240. Is it 10?
No,
No,
it's not 240. 10
250.
naira.
49.99.
10, exactly. Please don't press your calculator. Don't make the mistake. Oh. Always press your calculator. So what's 250 minus
Okay, 249. 249990.
exactly 249
249,990.
exactly, right? So then this one is still enjoying its capital allowance. It has more money after this one, so 540. All right. So what's the summation of this? We have 7,989,990, right? Right. So that
Yes,
is
sir.
that is that about that. So we can just help them to compute. Although they did not send us, let us just do taxing down value for this year. Taxing down value for this year will now be this one will still be 10 naira. This one will also now be 10 naira. This one will now be this minus this, which will now be the final year, right? 990, and that will be all. Is there any question, please?
Mm.
Is there any question?
Mm.
The assignment I have for you guys is for you to redo this. There's no solution in the manual. Go and recompute this Jessica Ventures. Recompute the Jessica the same way I've done it in class now. Go and do it as an assignment. Do the asset allocation schedule and the capital allowance computation. Do it again yourself. Okay? Do it again yourself. When you do it, reach out to me. I will share this schedule with you so that you can use to confirm and see where you made mistakes. Okay? Because I've seen that a lot of you don't even attempt your assignment at all. You do not. So Do it on or before Thursday. Then I'll share this schedule with you. I'll save the schedule now. I'll share this schedule. I'll share this schedule with you so you can use to compare where and where you made mistake. But I want to see your assignment. I want to see your assignment. Is that fine?
Yes, sir.
All right. Thank you so much. Because I will not do it. There's some people that have not even been in my DM for assignment at all. But God is watching all of you.
Sorry, sir, I have a question.
Right. What's the question? Now that there's assignment, you have a question. Oh, yeah, I'm listening.
Please,
Oh,
for
yeah, I'm
exam
just
purpose,
joking.
are they going to supply this initial and annual rates for us, or we have to know it
Yes.
off and
No. It will always be in your question paper. The table will always be in your question paper. Don't worry.
Oh,
It's always be in your question paper.
okay.
Yeah. Do we have any new face in the class? Let me see. So I can greet them, welcome them. Welcome. Elizabeth Olayoju, have I met you? Good evening, Elizabeth. No sound. There's sound though. Elizabeth, is there any other person that cannot hear me?
Evening, sir. I was taking drug when you were asking question from me, so that and I was shocked. Eventually, my distance was not friendly since it threw me out 30 minutes.
Hey, so sorry. Don't worry, you can rewatch the video. Okay, the video will be shared with you guys.
Yes, sir.
How you doing? Hope you enjoyed the class at least a little bit.
Yes, sir. So what was especially the calculation part?
Oh, yeah, don't worry. You can check the video, and if you now have any other question after checking the video, after rewatching the video, you can reach out to me. Okay. Are you on the group page?
Yes, I
Okay.
did the assignment.
Oh, okay. All right, that's fine. Love it. How are you doing?
Fine, thank you.
I hope you're able to follow the class.
Yes, I do.
All right, thank you. Abiodun, Victor, Kun, Victor, Muyebat, Chidima, how you guys doing? Osana,
Fine.
Fine, sir.
Fine, sir.
please, you guys should enjoy your weekend, though. Please do the assignment, please. All right, thank you.
Yes, sir.
Take care, please. Good night.
I thank you.
Thank you.
Nice.